When buying a home, the first thing that you want to do is get pre-approved. A lot of buyers are doing this the wrong way, and sometimes getting pre-approved in the wrong way can start things off on the wrong path. Make sure you talk to a quality loan officer. Luckily, we have one here. This is Maureen Lein from Rate. She's going to talk to you about some of the mistakes buyers make up front that could be costly later on down the road and the ways in which she prevents them. So Maureen, people are, when they get pre-approved, they're focusing sometimes on the wrong number, when really they should be looking at the overall picture. So what exactly does that mean?
That's exactly right, John. So a lot of people are focused more on the sales price than they are on understanding, well, you can buy any size home you want, but in the end, it's going to be the loan size that we're qualifying them on. And not only the loan size, but all of the other moving parts that come with it. The amount of the property taxes, the amount of the HOA dues, etc. So when I have someone that comes to me and says, okay, I want to get qualified for a $500,000 home, well, we've got to dig a little bit deeper to find out exactly if they are eligible for that purchase price and that unique property.
So it's good for them to come in with a general idea of what it is they want. You have to really look at what they have coming in, what they got going out to see if 500 is actually in the cards, or if maybe it's in their best interest to go a little bit further.
Well, true, because we can approve people up to 500, let's say, but then that payment is outside their budget. So a lot of times those loan officers, they don't ask those questions. They don't dive deep to find out what these clients are comfortable paying. And if they just said, I want a pre-approval for 500 with X down, then that loan officer is just going to give them that pre-approval and send them on their way.
I think that right there is the key difference. Not just getting pre-approved for a number, but also finding out whether or not it fits in your budget. Because we all want to have money at the end of our month, not any month at the end of our money.
Correct. And we don't want them to be moving into this home, being super excited to like 6-7 months down the road, find out that they can't afford it.
So what some buyers hear is you're pre-approved for this amount, but they don't necessarily think, does that amount fit into my monthly expenses? And with things constantly rising as far as groceries and gas and stuff like that, this becomes all more prevalent today.
Well, yeah, all more prevalent today. And what they have to understand too is these property taxes that they have now, or the home insurance premium that they're paying now, and even HOA dues, they're more than likely not going to be that amount the following year. You know, these things increase every year. So if we're getting someone qualified at their very max now, we're going to see that they're going to run into some trouble and some financial stress, you know, in the near future.
And that's not a good way to live life. And you, at the end of the month, you want to be able to go out to a nice dinner, go on vacation. And it's very rare, like you said, that the next year that the HOA calls and says, hey, we're knocking an extra $100 off your monthly payment.
Right. No, that doesn't happen.
No,
yeah.
That would be very rare. Play the lottery because you'd be the luckiest homeowner in that moment. The assessor's not going to go, we made a mistake, we need to move a decimal point over.
Right, exactly. And so that's why when you go and you speak to your loan officer, don't just say, I want to get approved for 500, because you may have a loan officer that just will do that and send you underway. Whereas myself, I consider myself an educator and not just a salesperson. I want to make sure, okay, yes, you do qualify for this, but you have to understand, here's how much money is coming out of your check each month, right? Because we approve people based on their gross income, not their net income. So we need to show them on paper, okay, after this payment comes out, here's what you have left. Is that going to work for you?
Knowing the difference between your gross and your net, even though you're approved on your gross, but knowing your net and what you're comfortable with, your comfort level should be paramount in this decision. It's a pretty big decision, and having that conversation up front matters a lot.
That's exactly right.
So a lot of buyers are wound up in the excitement of the process. They're excited to get the keys, but as soon as that happens, then the day-to-day, the month-to-month happens right after that. And that's when reality tends to set in.
That's exactly right. And so that's why being educated about the home buying process and the future possibilities of what expenses are going to be will allow people to make a realistic choice as to what price range is going to be comfortable for them. Because the last thing we want is them to be what we call house poor.
Right. So that means you might be living without a kitchen table for a couple months because you need to save up money. And
right. And not only a kitchen table, but you might not be able to go out to dinner with your friends. You may not be able to go see a movie, go bowling, do anything except for literally go to work and live in your house. And nobody wants that.
No, that's not a life. So if someone is currently hesitant and then maybe they're getting a little scared with the video of like, maybe I shouldn't buy, maybe I'm a little bit concerned. If they have those reservations, does that mean that they shouldn't buy a home?
No, not at all. Not at all. You know, what a lot of people don't understand is our parents, the homes that they're living in now were not their first home. It was probably their third or their fourth home. So young kids now come out and they see these expensive homes that their parents are living in and they want one just like it. Well, you got to understand, you got to move yourself up, just like with any job, right? Is you start somewhere, you build up equity in that first home that you purchase. So it's not going to be your dream home, but you're getting home ownership. You build up some equity in a matter of years. That equity then you sell and you use that to buy your second home and so on and so on. And I think that has really gone out the door, and we don't see a lot of our first-time home buyers understanding that this is temporary. They are thinking this is the rest of their life house.
So the equity and the wealth that they build with the first home rolls in the second and they continue moving up. I know it's very exciting to see that beautiful 6-bedroom home.
Right.
Say, I want that, but knowing that that's a part of the process and that will come eventually, sometimes it's hard to wrap your mind around.
Correct, because what they don't know is, okay, maybe they have children already and something happens and they end up having another child. Now they have to move up in the house, right? Or they're just single and they don't have a boyfriend, but then in a matter of a year or two, they get married and now they're thinking of building a family. So these homes that they're thinking they're going to have, long-term or lifetime, a lot of things can happen in their life where that's not the case.
So Maureen, what does it look like when a buyer does this the right way?
So what I do is I have them fill out an application first. I go through that application and then I make a call or we sit down face to face and I find out their needs and their wants. So the most important question is, have you gone through a budget? Is there a monthly payment that you're trying to stay around each month? If you haven't done that, what we can do is get you a max, walk you through it, and then we can make some changes based on how much money that you have to use, the monthly payment that you feel is going to be comfortable versus what I feel you should be comfortable with, because again, we are qualifying them on their gross income, and that's the income they think, until we sit and we go through maybe some of their bills or their expenses and we say, hey, look, maybe we need to lower this, or you've got a lot of room, we can actually go higher if you're comfortable with that. So it's all about just finding out their needs and their wants and making them think about things that they didn't know, because that's why they're coming to us, right? They have no idea.
Yeah.
And if, just like a doctor, if you don't ask those questions, they're not going to tell you because they don't know what you're wanting to know.
Right.
And so having that conversation, making them ask the questions, me digging deeper, is going in the end to overall get them something that they're comfortable with.
So pre-approval process has multiple different levels. Like you can call this online number and talk to someone out of state that will look at what you got coming in, what you got going out, and say you're approved for this. Or you can have a situation where you sit down with Maureen, you talk to her, she asks the appropriate questions. She finds out your whole story and then says, based on what you've told me, it feels like this is the route to go. The studies show, the numbers show that this is what is comfortable for you. These are the two different experiences you can have. A lot of buyers don't realize that there are multiple levels of experiences because there are multiple levels of service. You want full service? You talk to Maureen. Want a little less stress? You talk to Maureen. You want something quick? You got a piece of paper? Talk to someone outside of state. Which experience do you want? It's your choice. It's your home. It's your signature on that mortgage. Talk to Maureen. That's what I would highly recommend. We'll talk to you again soon, friends. Until then, take care.
Take care.